All right, guys, good afternoon. This is Christian from Tribeca Trade Group, and this is your recap for Monday, March 2nd. So great to be back in the office today. I was out a few days. We actually had a Tribeca Trade Group trader meetup in Vegas. And of course, whenever you plan these things, the market always seems to kind of go nuts, or there's something else that's going on. It just always seems to be hard to get away. I honestly don't take that much time off, and I probably need to take a little bit more time off here and there. But it seems like whenever I do, there's always there always seems to be to be something going on. But I think a lot of people think that too when they go away. But so really nice to be back in the office to have multiple computers and screens and so forth, and back to the base, and also to be here for the nice price action today. Just to sum up today's index performance, SPY finished up 4.3% today, monster move. The Qs outperformed. They were up 5.2%. That was something that we went over in the week. I did actually. So what did we do? I did one video this weekend, and I put out a watch list. And then what we did was we talked about charts and kind of a little bit of strategy last night at 9 o'clock at night. And was talking about that I like the Qs. They just seem like a little bit of a cleaner setup. So I'll go over that in just a second. And small caps, which saw some call buying today in IWM, even though they underperformed as usual. Finished up 3.2%. So, theme of the day, what I have is equities rebound. I think also the first of the month flows. People kind of forget about this, but you have a little bit of an advantage. I was coming in today thinking that we would see some money come off, a little bit of money, the little money that's on the sidelines, because I think that's still one of the issues in this market is how small the cash balances got. But nevertheless, regardless. I think so. Investors took a chance on the first of the month to kind of go back, and I know today's the second of the month, but it's the first trading day of the month, and we did see some blocks go up in things like IVV. So Ida Victor Victor, that's the iShares S&P ETF. So I think there was some inflows into that and some money coming out of some short term paper, but I'll have to check that in the ETF fund flows that I'll track the next couple days. It's always nice to see that. With ETFs, you could always confirm, like you don't have to wait for like a 13F or something like that. You could basically see it the very next day because of the mechanism that market makers have to create and redeem, from facilitating those big block trades that we saw today. All right, so sectors. What was pretty interesting, I think, look at the consumer staples and look at utilities. So I don't think, so just because they bought some equities today, I think they were buying some defensive groups. The utilities, which did come down last week. So I don't want to talk about utilities first, but I mean, look at that barn. I mean, that's a crazy move for XLU. Absolutely nuts. So that's appears where there was money that was put to work. Look at the volume too, the last couple of days in the utility ETF, but pretty wild. And again, just like everything else, you couldn't hide in utilities last week. You couldn't hide in gold on Friday either. So to summarize, what else did pretty well here? Pretty much, there was a lot of things that were up pretty strong for the day. Tech was up 5.8% too, so there was a lot of good outperformance. The market breadth was very strong today as well. Not super strong. We actually saw a couple days where the market breadth was much weaker than it was on our indicator. I could probably show that here on the 5 minute bar. So if we bring up the 5 minute, and then we could talk about some other things too, but market breadth indicator should be down here. You could see it was around 3-4. We had that one day where this was Friday, where look at where it opened, like all the way down here, and then came back. Sorry, the screen keeps jumping here. This was Thursday, I think, where we were around like -15 for the day. So again, we saw some breadth that was much worse than for as nice as the market breadth was today, it was much. We saw days where it was really tilted in the other direction, much more negative than it was positive. I'm trying to say that correctly with the negative and the positive sign today. So what? So a couple of things that were taken out, and let's go to the daily chart first. One thing that I noticed, right, and it was kind of painful to watch these last week, was a lot of these virgin point of controls were taken out, and I think of course there's one all the way down here, but I think for the most part we saw a ton of these being taken out. You can see on the 1 hour, the 5 minute, which will take Thinkorswim, it will take a little bit too long for it to bring up, but you could see most of these were taken out. Like you could see on the 1 hour, we don't have another one. I don't think for a while. So it was kind of one of those things where things were just being ticked, in terms of like checking boxes, basically. Sorry if I said that wrong. So you can see this kind of leaves us in value for the week. Remember in the weekend videos, what I talked about was I was looking for a move to see if we can get inside value. We did that. We dipped out of it, but all I think, I think the thing that's important here is to have a level that you could trade against. We outlined a couple names. I outlined a couple names that I thought were setting up pretty well. I talked about how the Qs. Let's just start with the weekly chart for a minute. So S&P did reclaim the value area, but where I thought the Qs were in better condition. The Qs had basically, even though there's just we only have one day of the week, so we can't really make a conclusion based on this bar yet. But notice how the Qs held the top of value for the year. So I was talking a little bit about whether things are going to be still in an uptrend after last week. The Qs were one thing that definitely was, right? And if you go to the daily chart, you could see that the Qs bounced on the 200-day moving average. So I spent some time on this and trying to analyze, what was the strongest of the U.S. indices and where, what I was looking at for a possible trade for this week. So we've bounced into the bottom of value for March. So again, this is just one day, and I think you just kind of have to take one day at a time right now. Also on the 5 minute bar, you're going to see in the NASDAQ futures, which are a little bit different, there are some more VPOCs. There's one on the 5 minute that we almost took out right at the bell, right at around 4 o'clock today. So interesting, that was a good target. I did go long the Qs today. Here was my trade blotter. I had lined some things up. Unfortunately, I got stopped out of the first trade that I put on. It just wasn't working, and that's fine. I'm again perfectly happy to get stopped out in something and use discipline in case I'm wrong in my assessment. But I wanted to come in today and put some risk on, but I wasn't going to blindly do it. Lulu, right? So this was all the trading systems were very difficult, were hard to manage in the first 20 minutes. That's just a situation that we have to deal with as traders. It doesn't matter if you're a retail trader or an institutional trader. I've had it happen to me both. When the market is really volatile. When I was, we had much better trading systems, obviously, on the institutional side, but they would still break down from time to time, and you would have lapses, and it would be a horrible situation when it would happen. But, we're operating many different trading systems, and sometimes something would break, especially when they're stressed in higher volatility situations. But Lulu, here was our setup, and this is kind of the recipe of how I trade. I try to do it without emotion. I try to plan the trade ahead, and no crystal ball stuff, no doom and gloom, no perma anything. If it doesn't work, it doesn't work. But I like Lulu, the fact that it, if we go to the weekly chart, it was holding above value, right? So number one, still in an uptrend, still holding major support. I didn't think that even though I've got arrows drawn all over the place, I just kind of outlined some of the things that were taken out. 2 virgin point of controls taken out, which was a good thing, and then a place where you can possibly take a target or take your final target if you want to at 236. So, and then of course, again, this is just basically mapping out a trade. But then I need a line basically to enter, and that was on the 1 hour chart. So this is what we were looking at this weekend. I said, hey, as long as we get above or inside value for the week, that was where I wanted to go long. So you could see how this trade developed. On the 1 hour, you could see it did get into value. So I got in. What was my entry price? My entry price was 220.60. So just a little bit inside value. And I was able to take a target today up at 229. So this worked out really well. And again, that's a really big value area for the week. So I'm looking at, let me go back to this, probably the bottom of value would be where I would take off most of that trade. Right, and this is for my trading account. I have Lulu on in the tactical portfolio as well. I put my performance up on Twitter and in the trading room, just so you could see how I fared for year to date, and I'll continue to do that. And of course, you could see the tactical portfolio here. So other trades that I did today, one of the strategies that we talked about in last night's member, late night future session was how to kind of trade options in this environment with the VIX, which got close to 50 on Friday. One of the things that I talked about was a limited risk reversal, buying a call and selling a put spread, and using that sale of the put spread to help finance the the cost of the call. Now you're taking on some added risk here, and that's why you wanted to find about $1,000 of risk per contract. So you may not want to do a whole bunch of these, and you want to make sure that you're okay with that type of risk. But I was able to make money on both the calls and on both the selling of the put spread and the Qs. So that worked really well. And then we did a little trade in Zoom, which Zoom lined up pretty well. But again, it's all about just mapping it out and knowing in advance where the trade is going to work for where it's versus where it's not going to work. Zoom video just got over. This was a late day trade, end of day scalp that I was doing, but I was able to get out at 113. So that worked pretty well. Yeah, so the tactical portfolio, right, which is a little bit more for investing. I do rebalance this once a week. TTG portfolio. You could see how our performance did. And again, anyone can pull this up. You do need to have, I need to give you permission for it to see the constituents, but you could see the performance at any time you like. And the blue line, again, we lost a little bit. I did have a portion of bonds in here, just not enough, maybe not enough bonds. I thought that was also an interesting, so again, you could see the blue line is the portfolio. We are performing nicely. And I'll look to rebalance that probably tomorrow. But here's what bonds did today. I thought this was telling. For the most part, the long bond was up for the day, and then really started to sell off at the end of it. Gave back those gains. You could see that move in the bond. So again, you're dealing with something that had an 85 RSI or something like that. Where'd this thing get to? About an 82. I think TLT was hotter than that. Remember, TLT is a little bit different. And of course, also we put out our watch list for the week. I think did great today, up 4.4%. I think Costco was the best performer. Costco was up 10% today. Monster move. And some great from a few different members who mentioned that the names like Walmart, Costco, even Rite Aid did very well today. Maybe profiting from all the foot traffic in their places this week. But yeah, pretty well rounded. A lot of names that we put on here did very well. What did Datadog was the only name in this, right? So usually again, I just had a question about this at the end of the day, but this is basically a starting point. That's I like to compile a list of names that I think are technically strong or just like the Lulu, for example. And then what I do is pick a couple names. I have alerts set on all the names, and then what I do is figure out which of the setups that I like the best. So all in all, a great day. I'll kind of leave it there because the video is 15 minutes long. I think again, just take these. Even though the VIX came all the way down from, almost touching 50 down to 33, which I think is good progress. I wouldn't say that like we're out of the woods with this coronavirus stuff. I think it was really interesting that all these companies, I think there's about 3 or 4 companies that are trying to work on a vaccine or at least start the testing, which they're probably not going to be able to do for a month or so from what I was reading on Bloomberg. But the fact that they're all kind of working in unison, of course, doing things differently, but everybody seems to be working on one. I think that's really good in a place that really want to get to, and that's why I've been optimistic. I do think the technology in healthcare is so much better than when any of these other things happened. That these guys are going to be able to figure it out. So that's been my view, and of course, to manage your risk, control what you can control. Because even though I have that viewpoint, it doesn't mean I can control what the market's going to do. So control what you can control, which is your risk, and take things one day at a time. All right, guys, have a great night, and see you tomorrow.